Hello everyone, welcome to another episode with me, Shashank Udupa. And in today's episode, it's not a stock market episode. Today's episode is going to be about personal finance, and it's very important for all of you to understand why personal finance is very important. And I'm going to tell you a few ways where you can think about investing your corpus, right? Now, today's episode is going to be about goal based investing and how you need to invest with a particular goal and a mindset in mind. Now, just to give you guys a brief understanding, most of the decisions that are taken in our life, or most of the things that are there in our life, are all predictable, right? You know when you're going to get married, you know how many kids you might have, you know those kids will eventually go maybe for higher education, you know when you're going to get married, you know when they're going to get married, you know that there's going to be some weird uncertainties in life that you never thought of, right? But you know all this, like most of these mota stuff, you know if some weird random thing comes, you'll never understand that, right? But the best thing for anyone to understand how to crack this game, and it's not very difficult, is to do proper financial planning. Now, because I know all this and we've seen all this, I've seen it with my parents, you would have seen it with your parents, it's not very difficult to understand and map out the entire structure. Now, if you had to sit down and map out all the different major events in your life, you'll realize that, oh shit, I need to save a lot of money to actually fulfill all these major demands in life. And there are a lot of things in life that you need money for, right? So we're going to look at all of that today, and if you want to make a goal and you want to make an investment based on the goal, we're going to look at all of this today as well, right? Now let me quickly show you some of the major events that are there in your life. Now if you think about the major events in your life, what are the major events? Okay, assume you're 25 right now. Okay, you're chilling in life, going to Goa, having fun, relaxing, all great, right? Eventually what will happen, thoda family pressure आएगा या बाकी लोग बोलेंगे कि you know what, चलो time to get married man, or you know just get married ASAP. After that, you'll start getting married. You'll finish your marriage. You might have to go for a honeymoon, go for an international vacation. Then you'll get a kid in a few years, and then that second kid will come in a few years. After that, kid ka education, your monthly expenses start going up, and obviously your monthly income also starts going up at the same time. Assuming you're working really hard and you're smart and you're upskilling yourself, right? Now ये सब भी हो गया, right? Okay, उसके बाद I want Shashank, you know what? I even want to go for like international vacations. अरे कार भी लेना है, वो भी भूल गया मैं. You need to take a car as well, right? So that is also very important. That also comes into your personal finance planning, right? Now eventually what happens is after a few years, you will see that the kid grows up and the kid gets into some massive good college in say US or UK, and your like fees is 40-50 lakhs. वो भी inflation के साथ वो time पे, right? You'll be like, oh shit, now what do? Do I take another loan? Big problem. Now what if the kid comes, first kid, second kid is come, but now you need a house to stay in. Now again you're going to go into a massive EMI trap. That is going to be another big issue. So all of these things, how to tackle them, how to fight them, I've made a proper Excel sheet for it, right? And if you look at this Excel sheet, maybe add your own stuff here, you'll actually figure out that it's not very difficult to plan. Like I keep planning everything. I keep saying this to people that I don't live in the present, I live 5 years in the future, right? I always know what my next goal is, I know what my next target is, and how much money I need to save. Depending on what I need to do 5 years later, I start planning right now. Like I bought a car recently, but that was planning was going on from the last 2-3 years, right? That I need to get a car, that's my next goal. Right now my next goal is either a house or a farmland, one of that, because of tax benefits. Depending on how much money I make, I'll choose what I need to do, right? But let me show you that the Excel sheet that I want to show you about. Now look at this, right? This I'll come to next. Now if you look at the entire Excel sheet that I'm showing you right now, let me just zoom in a little bit more so that you can easily map out this entire structure. Now what I'm doing here is I'm going to basically list out the major events. Now major events are with respect to age brackets, and also segregated this with respect to how your cash flow will get affected with these major events, right? Now number one, if you look at it, 25 to 30 ka age bracket mein, who all are there right now, here are some of the major events you will have. You will definitely have a marriage coming up very soon, or you might buy a car or a bike. So let me just put bike here as well. Either or, you need some mode of transportation because now you are working and you need to get money, so you need these things to go. No other major event happening from 25 to 30. So apart from your small trips, right? Goa trip, domestic trips I'm not catching. So at this point, it is safe to say that this is a low cash outflow period, but this is also a point where your income, which is your cash inflow, is also slightly low. Right? So low inflow, low outflow, because now you're building your career. If you have high inflow right now, this is a golden period for you. So this entire point, 25 to 30, I would say is your golden period, and start saving as much money as possible. Why? Because I'll tell you that also. The next around 30 to 35, you might plan your first kid. Now sometimes people will be like, Shashank, मेरे को बच्चा ही नहीं चाहिए, ठीक है, वो आपका lookout है. Sometimes people might say only one I want, or might be wanting two, right? So I'm going with the general populace of people might want two. If you don't want to, you can keep one as well. This just changes a little bit for you, right? So 30 to 35, you will most likely get a kid, right? Kid ka jo small expenses are there in the initial days, there is no expense. But now your cash outflow, which was low, slowly becomes little more. Why does it become little more? Because now you are providing for two people, not one person, right? Earlier it was only you enjoying Goa mein ja raha hai, mast daru pi raha hai, theek hai. But now what is happening is now you have to take care of your wife and you have to also take care of your kid. So now two expenses come out here. So medium cash outflow, and your cash inflow also starts increasing now because you're in 30 to 35, you have 5 to 7 years of work experience. Now in this point also what happens is you might want to do an international trip, right? Just before you get the kid number one, you might either go for a honeymoon or you might go for some international trip or even a massive domestic trip, which is slightly expensive. So plan this major event as well. Now what happens here for a solution perspective, this is the perfect time. 25 to 35 is the time you need to start planning your emergency fund and getting at least 12 months of emergency fund, because बाद में बहुत मुश्किल होने वाला है, right? 12 months of emergency fund you can definitely protect and you can definitely invest, and I'll make a separate video on where you can invest your emergency fund. Actually, I can give you a small brief here as well, right? Because emergency fund needs to be a mixture of 2-3 things. I'll come to that next segment. Okay, now 35 to 40 is where the red zone starts. Now, what is the red zone? Red zone is your massive outflow time, because here you're most likely getting kid number 2, right? So uska expense aa gaya. So now you're taking care of wife and 2 kids and yourself, so 4 people. And if you have to take care of your family, then 2 more people, right? If your dad and mom, so 6 people. And now the pressure comes कि अभी शादी हो गया, बच्चा हो गया, अभी next सब लोग एक pressure मारेंगे, भाई घर खरीद ले, you need to take a house right now, just buy a house. But you'll be like, अरे but house is illogical, why should I buy a house right now, इतना EMI, I'll get trapped. No, house is important because of financial stability. Now assume you can't get out of this and you need to get a house. Okay, fine, I agree to all of that as well. Leave social stigma aside, right? If you have to get a house right now, you need to put down a one-time 20% down payment on the house, right? So that's cash outflow, one-time massive chunk of outflow going out to the bank. And on top of that, remaining 80%, you might take EMI. So ideally, what you should do here is to take a lower EMI amount and put more down payment. But to put no more down payment, don't break your emergency fund that is there that you've built for 12 months. That you cannot touch. So this is over and above your emergency fund. So first 12 months emergency fund. What is emergency fund? It should be your monthly salary into 12, and that will keep compounding and growing. So you leave that. After that, you start saving up for your house down payment. If you don't have the money, just tell everyone, boss, I don't have the money, I'm not taking it right now, or 5 saal roko. No problem. If you buy the house from 40 to 45, kuch nahi hone wala life mein, right? Nothing major is going to change. Cool? So high cash one-time outflow, plus you come into an EMI trap. Now EMI you'll take maybe 20 years till you're 60, but try to do loan prepayment as fast as possible so you clear out your EMI. So ideally, the solution here is to ensure your home loan EMI is 20 to 30% of your monthly income. So if you're making 1 lakh at this point, 20 to 30,000 should be your EMI. For your EMI to be 20 to 30,000, your down payment has to be more, or your loan tenure has to be longer. If you're and it's okay to take a longer loan tenure. If you take 20 to 30 years, it's fine. You know why? Because we're going to prepay it very fast and we're going to clear the loan ASAP. There might be a small fees, but if you take floating rate of interest or floating interest rate, there is no charges on loan repayment. I can start paying. I think 1 year you can't do the first year, but second year onwards you can start repaying ASAP. Okay, so that is very important, and you also get tax benefits, by the way. So you save more money on that. Now another 40 to 45, 40 to 50. Now this comes your golden period again. Right, abhi this is your EMI paying off period, चुकाने का period आ गया, right? Because इसमें क्या हो रहा है, your kid is now becoming a teenager and ये वो ये, so small expense will be there, like iPhone चाहिए. Don't get them used to iPhone, but iPhone चाहिए, because you have to pay 70, 80, 90k to buy them a phone, right? So 40 to 50, most likely you get another car, because at that point your family has now gone from 1 to 4 people, and your car which you bought at 30 will be now 10 to 15 years of age, so you might need another car right now, right? So car and maybe another international trip. If you don't need it, fine, no issues. So here you have low to medium cash outflow, but here your cash inflow starts increasing a lot. Why? Because now you're 20 years experienced man. 15 to 20 years experience you have right now. You might be getting bonuses. Save all of that. So your emergency fund is still safe. Now whatever money you get in this 40 to 45 period, you have to start saving. Now I'll tell you why. इसमें तो you have to clear your loan that you have taken, your home loan that you have taken. Now the biggest mistake people do is here, right? Where in the 40 to 50 golden period, they don't save, they spend, they enjoy, because they're like, बहुत पैसा है मेरे पास, मैं घूमने वाला हूँ, मैं कुछ भी करने वाला हूँ, right? I'll tell you why this is a big problem. Because immediately after 50, you're in for a massive outflow, and I'll tell you what this outflow is, right? Now you're already paying your EMI on the home loan. Assume you have not cleared it in these 2 years, because it's a massive EMI, right? Now as soon as it becomes 50 to 55, your first kid now is around 20 to 25 years of age. Your second kid also becomes in the next 10 years 20 to 25 years of age. So 50 to 60, your last 10 years years where you want to be like, bas abhi मैं retirement करने वाला हूँ और पहुँचने वाला हूँ, this is where massive outflow starts coming. Why? Because maybe someone got into Harvard, or maybe someone got into Oxford, or even maybe someone got into different business schools where you need minimum 50 lakhs to 75 lakhs. If it's US, you pay double. If it's UK, you pay 1 year ka cost. US is 2 years ka cost, right? You pay much more. And bacche ka education, you can't say no. So ideally what happens at this point, there is two options you can do, right? One is, nay, you're my son or daughter and you want to go, education is the birthright of the family, father or mother, we will pay for it. Okay, great, you pay off the entire thing for 2 kids. Or you be like, aap loan le lo, you figure out your own, kids should go take their own loan, figure it out and you pay it later, right? That way your outflow goes. But usually what happens in India, the parents only pay because the kids do not have money to go for higher education. They take a loan, but either you take a loan and then you start paying EMI. So by now, if you have not paid your home loan EMI, what happens? You're getting 2 more EMIs right now. You're getting home loan EMI, right? You're getting higher education EMI for first kid and higher education EMI for second kid. Massive stuff, right? But again, education loan also EMI, that is tax benefit. So please look at that as well. Now you'll be like, boss, thak gaya main, right? होम लोन भी भर रहा हूँ, हायर एजुकेशन भी भर रहा हूँ, दूसरा का किड का भी एजुकेशन भर रहा हूँ. आई थिंक आई शुड जस्ट रिटायर. नाउ योर किड्स हैव कम बैक फ्रॉम हायर एजुकेशन एंड दे डूइंग वर्क फॉर 2-3 years, so now you're not paying their money but you might be paying their EMI off. Then you think now is the time for you to relax and you can finally retire. No, you can't, right? Because अभी बच्चे का शादी होने वाला है. Right now you have come back to the entire loop of cycle where you got married 30 years ago. Now you have to get your kids married after 30. Right now you're like, I have 3 EMIs on my head. Right, and now I have to again spend a lot of money on the marriage. Now if you do a low cost marriage, it is great for you, okay? That if you do a low cost marriage on whatever caste it is, just do a low cost marriage, great for you. But sometimes society again says that you need to invite 1,000 people and give them food, and then that becomes a big issue because you need to get both kids married at the age of 60 to 65, both of them. That's a massive cash outflow. Again, it's as equal to your master's degree. So I've seen people spend crores on this, right? Now again there's a cash outflow. Now what happens is some people take loan for this also. बस अभी क्या होगा, by the age when I have to retire at 60-65, I am paying 4 EMIs, right, on top of my life insurance that's going on, because now your life insurance that you take at the age of 60-65, premium is so high, but that life insurance should also cover all the 4 EMI ka cost. Not EMI, but the entire loan amount. If a loan amount is 5 crores, you need to take an insurance more than 5 crores, minimum 7-8 crores. That's what I'm giving an example. Because something happens to you tomorrow here, everything, your loan has to be cleared off, or else your बच्चे के ऊपर loan आ जाएगा, which is not a great thing. Now after all this, okay, you're like, my god, मेरा retirement का corpus आ गया, right? Or my PPF or PF has come out and I'm just clearing all my loan. Now what happens is you're not earning, you're 60-65 right now, your retirement style, you're not earning, but your expense is still there. Now your kid has just got married, he's not going to pay for your expense, you need to pay for your own expense, right? You need to be financially independent. Now what happens is you and your wife, you have to pay for yourself. Right now, do you have enough money to sustain from 60 to 80? Assume you live till 80. 60 to 80, do you have enough money for the next 20 years to sustain you and your wife? Right? The expense won't be too much, but expense is still there because now you're retired and you want to chill and you want to relax. घर तो बना लिया आपने, तो you have no rent का issue, बस daily खर्चे का issue है and EMI भरते जाओ. So this is the entire thing. So now you understand why golden periods where you have to save money is very crucial, and because the high outflow from 50 to 60 to 65 is where most of your money starts going out very fast. Now, everything can be planned very, 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 very well. Now, coming to where you should invest, right? Or where can you invest? Now, emergency fund or wherever you need to invest, you need to just start beating the benchmark index. Now, when I spoke about emergency fund in one of the videos, I'm going to make a detailed video on it, but I'll just tell you a normal way of investing, right? A normal way of investing is not putting all your money into stock market. That is a big issue, right? You can't have all your money into the stock market because kal wo gir gaya, and imagine the stock market crashes when you're at the age of 50, 55 and you have to pay for your kids' higher education. Gone, you're minus 20% and your entire portfolio is down. So putting all your money in the stock market is bad. What you should do is you should diversify. You should put a little bit of money in the stock market, little bit of money in bonds, and little bit of money in gold. Very simple. 3 hedging mechanisms. Gold is a hedge, bond is a fixed income instrument, and equity gives you that alpha because high risk, high returns wala game hai usme. Right? So these 3 things are there, and if you invest in these 3 avenues or these 3 things, you will start obviously having a very balanced and a diversified portfolio as well. Right? Now, I was just showing you something that Small Case recently launched, okay? So they have launched something very similar to this. By the way, all this is free. Nothing is paid. So you've seen all weather investing that was there for lower ticket people who have 1,000 rupees to invest. Similarly, Horizon Portfolios has come out with something very similar, right? Now, Horizon Portfolio is basically a goal-based investing kind of a model from 2030 to 50 to 55. So if you look at this scheme, I'm going to say, okay, I need it till, let's say I'm around 30 right now. I need it till I'm 60. So around 2055 तक मेरे को invest करना है. So I would choose something like this, right? Horizon 2055 to start investing in this, right? Now, what does this comprise of? Let's see this, right? This comprises of a Bharat bond, which is your fixed income instrument, okay? So Bharat bond, but only 14% weightage. Okay, then it invests in the Nifty ETF, which is your index fund, okay, which is your stock market index at 60%. And then you have the gold ETF as well, which is 25%. So you see the allocation right now in equity is higher and the allocation in gold and corporate debt is slightly lower, okay. Why? Because in the initial few years, your risk appetite is slightly higher and you can take a better bet and you can also get the alpha. But if I just go back and show you, say, Horizon 2030, which is now in the next 8 years, you will see that the index is different. Here, what is showing? Corporate debt is more, right? Equity is slightly less, cash also is there and gold also is there. So, but you see here fixed income is more. So basically what this new instrument of small case does, by the way, this is managed by small case itself. What they do is they keep rebalancing this, but depending on your horizon that you have or depending on the goal-based investing you want to do, they keep adjusting the mix. So for example, if it's a longer horizon, they put more of equity and less of debt. So what the basic idea is with this is that towards the start, you will do wealth creation, and towards the end of your planning, which is 2055, it goes into wealth protection. And how does wealth protection happen? You go into more fixed income instruments like bonds, or you go into fixed income instruments like gold. Whereas in the starting few years, you need the stock market investing to kick in. So that is something that happens as well, right? So this is very important to understand and look at how diversified balanced investing. And here they also keep a small component of cash. This is liquid cash that they keep, which is the cash component of 12. So this is how it is. I'll put the link below. By the way, all this is free, so you can just go check it out, read about it, understand how this works, and let me know what you think about in the comments below. I'm going to put all of this later on, okay, in the comments below. Coming back now, this was a quick video on the goal-based investing. Now, a lot of people make problems in their investing journey because they don't plan properly, right? You need to just plan. And if you go talk to your parents, just go sit with them and ask them, boss, aapke zindagi mein kaisa hua, right? What are the different events and triggers? If you talk to them, you will see that they've done all of this already. And they'll tell you, boss, arre, ye time pe to bahut problem ho gaya tha. And you will realize at that point, ki, oh, there's a lot of problem because his corpus at that point was low. Right, but the expenses suddenly became high, not because of something else, but because of major events that are bound to happen in everyone's life. But if, as I showed you, you start planning, you build your emergency fund, you increase your salary, become a high net worth individual, or start upgrading your skills in the early life so that you start getting paid even more, become damn good at something, right? You will start getting more cash inflow, which beats your cash outflow, and then eventually, over time, you will have no problems and you will go through life very peacefully. Because as I said, you earn till 60, but you spend till 80, right? Understand this very carefully. You earn till 60, you spend till 80. So that even that last 20 years, you have to make up right now in this 60-year sprint. And you can only earn for like 35 years. So that 35 years, you make it and do whatever is required and try to retire after that at 60 with peaceful corpus in your bank. Okay, this is what is called true financial independence. Now, that's it. That was the video for today. I hope this actually helped you guys to give you a clarity on how you would plan. See, a good financial planner will always succeed in life. A bad financial planner will go through stress, will have irritation issues, will have mental issues, will go through depression. So don't get into that trap. You might just take more EMI and just screw up everything, right? So just make a proper plan. Now I know I've taught you. Please teach other people as well. And I'll keep teaching you more stuff. That's my job. I'm a teacher. I'll keep teaching you. Okay. Again, this is me, Shashank Udupa, signing off. If you like this video, please subscribe and share it with all your friends on WhatsApp as well. Okay. Thank you. Bye. Take care.